Alright, welcome back everybody. Today we are going to do a breakdown of the two gold trades that I took last night. I'll explain why I took them, my confirmations, and I will show you how it goes exactly according to the strat that I posted yesterday. So the first thing we're going to do is we're going to hop onto our daily time frame. And if we look here, you can see that early after yesterday's open, we swept our previous daily high, right, which would be right here. So then if we hop down to a lower time frame, I believe it was our 45 minutes, you can see that we swept this daily high, and then directly after doing so, we engulfed on our 45-minute. Now that in itself is a good confirmation, and realistically, you could have took this trade if you wanted to, right? Risked about 70 points, and you could have ran it all the way to the previous daily low. But I wasn't 100% sold that we were going to sell off. I was actually expecting buys, so I wanted to wait for a little bit more confirmation. And I believe that here we had a 30-minute engulfing, and then as well, once we knocked down to our 15-minute, we had a 15-minute bearish engulfing. These are all confirmations, right? So to recap once again, we swept our previous daily high, and I'll tell you why this is significant. So if we look at our daily chart, you'll notice a lot of times if we sweep a wick but fail to close above or below it, price is going to attack that opposite wick. So for instance, looking at here, you see we have this bottom wick, price pushed below but failed to close above it. So the next daily candle, what do? We pushed that opposite wick once again, failed to close above it. So then that next day we pushed above that wick, and then now we push down here, and now we're going to close below the previous day low, which tells me that we will eventually sell off further. As you can see, this is what I'm looking for. I'm targeting about 300 points tonight. Now back into our confirmations. We swept that previous daily high, and then we put in a 45, 30, and a 15-minute bearish engulfing. All are confirmations that give me confidence to hop in this trade. So once we put in this nice strong engulfing, I wanted to have a retest, exactly like how I explained in the strat yesterday, right? For the engulfing, I mark out just my candle body, and I just wanted price to retest this area and then make another move. So as you can see, I was only risking 20 points on this play, and at max, I was only down 6 points. So as I said yesterday, if you're not willing to risk $200 or $20, I'm not gonna fake it. Hit the demo. All right, hit the fucking courts, get some shots up because you got a long way to go. Nonetheless, risk 20 points, and then I was targeting. If we hop down to our 5-minute, where is our trade? I was targeting this bullish engulfing over here. As you can see, we never got a retest of that zone. And then if you mark out the entire thing, you can see that we did come, retest this area, drew back up to draw liquidity, and then made another move down. So that's super textbook, exactly like I explained yesterday. We had our high time frame liquidity, which was the sweep of that previous daily high, into a low time order block, which was our 45, 30, and 15-minute bearish engulfing. Extremely textbook trade, very, very beautiful. Now let's hop into the trade that I took early this morning. If we hop into our high time frames, this isn't a super clean engulfing. I would have preferred us to close below this wick, but technically it is an engulfing or an imbalance. As you can see, we had a similar price reaction here, which just classifies this as an imbalance zone, which means it's a giant zone of liquidity. Meaning, at some point, once we make our move, you can expect us to retrace back into that area, draw a shit ton of liquidity, make our move. So we see that we did that on our 4-hour. If we hop down to our 3-hour, we put in this bullish engulfing or bearish engulfing here. Sorry. Hop down to our 2-hour, we put in a bearish engulfing up here. And if we hop down to our 1-hour, we put in another bearish engulfing here. Now the reason I'm showing you these is because prior to this trade, this was all retested. All of these engulfings were retested. So that's going to be our high time frame liquidity. So from there, we knock down to a lower time frame. And as you can see, I didn't take this trade. This was just a mock trade. I was already up uh like 300 points today, so I wasn't really caring. But as you can see, completely textbook engulfing, boom, would have cashed out for another 200 points. Nonetheless, back over here. So we had our high time frame liquidity, right, with all those bearish engulfings. Then we drew up, retested them, drew liquidity. So now we knocked down, I believe this was a 5-minute entry. Yep. And as you can see, once again, after we retested that, let me go back and show you. After we retested our 1 hour bearish engulfing here, right, we hop down to our 5-minute, and then you see that we put in a low time frame order block. So once again, I mark out that candle body, just the body, and that is what I'm looking for a test. SL is going to go at the top of that engulfing. Once again, risking 17 points. 17 points to make 100 points. Damn near a 10-1. If you are not willing to sit here in the paint and take 20-point losses, hit the demo. All I got to say. Anyways, we drew up. I'm not going to lie to y'all either. I put my pending order in for this trade, and I went back to sleep. That's how I felt this morning. And sure enough, we drew up, activated my pending. I was down 13 points at one point, and then that next candle, we flipped bearish and engulfed. And as you can see, straight Draker, once again, was targeting another 5-minute bullish engulfing. Absolute Draker fucking textbook. And then if you want to go over this trade, it's the same thing, right? We had all those bearish engulfings, retest, liquidity, and then it's just a 15-minute version of it. Because as you can see, we didn't get a 15-minute bearish. Well, you could have traded this one, right? So it would have looked something like this. You would have marked out your candle body there, and then your entry would have been at the bottom of that candle body, and your SL would have been up here. So once again, barely risking anything, 37 points. And you wouldn't have had much of a draw, I believe. Let's see what you got. You would have had about 19 points of drawdown. But once again, completely textbook. We retest that engulfing. And then after doing so, bearish engulf, fucking chicken. And if you wrote it out and took partials or whatever, you know, we maxed out at a smooth 280 points. There's no I know it may seem super simple, and you almost might be thinking to yourself, there's no way it's this easy, right? It is this easy. No bullshit. I tell everybody that your strat for trading is 20%. All right, the other 80% is a combination of patience, risk management, and knowing what the fuck you're doing. And not being emotional about money. If you give a fuck about $1, I promise you, you will not be successful with this shit. But exactly like I explained in yesterday's video, for both of these trades, for all three of these trades, high time frame liquidity comes from our bearish engulfings, our first presented FEGs, EMAs, whatever it may be. High time frame liquidity knocked down into a low time frame engulfing, which is technically an order block if it happens within that zone of high time frame liquidity. From there, enter your trade. SL is going to go at the top of that engulfing, and you set your TP accordingly to other areas of liquidity. Super simple, super easy, fucking chicken. Had a great Thursday. I'll catch y'all with another breakdown.